Everybody, Jason Sherman here. In today's episode of Zero to CEO, I speak to Chief Executive Officer and founder at Self Storage Syndicated Equities, Fernando Angelucci. Welcome to the show.
Thanks for having me, Jason.
That was quite a handful. So let's talk a little bit about something that I'm actually curious about before we get into the topic, which is unlocking wealth with self-storage investments. I have dabbled in real estate, right? And a lot of people always say to me, how do I get into real estate? Like, what's the first step to get into real estate? And so I saw you mention something about credit cards, and I'm like, to me, that's like a no-no. So I want to know, what was your approach to using credit cards to raise money for real estate investing?
Yeah, I'm going to tell you the story with the preface that I don't recommend anybody do what I did. But at the time, the only way I knew how to raise money was using credit cards. So I quit my engineering job, and then in one night I applied for, I think, 64 credit cards in a period of like an hour and a half. So none of the other cards would see the polls from all those cards. And then about a week and a half later, I got 12 approved, and I cash advanced $97,000 off of those cards. And that's how I started my business.
Holy moly. And thank God it worked out, because that's a lot of debt to take on and interest and all that kind of stuff.
Right.
But I mean, you ended up starting a multi-million-dollar real estate portfolio. So that's pretty cool. Now, what's the difference between, because like, I mean, this is Self Storage Syndicated Equities is the name of your company. So I'm assuming your real estate has to do with self-storage versus real estate in the more traditional sense. What's the difference? Maybe it's obvious, maybe it's not.
Yeah, so I did the regular habitation-based real estate like everybody else, the rental homes, the apartment buildings. And the thing that I didn't like was the fact that someone could stay in one of my units. I have to go through this eviction process. They live there for free for 8 months before a judge will let me, show the case. And then when that tenant left, they did like $25,000 worth of damage.
Right.
And I said, this is not a way. I don't want anybody living in my investments and having this much power over me.
Right.
And then I saw this really, concerning trend of the government starting to interject itself into private investors' lives, saying, hey, tenants don't have to pay rent, etc. So I decided to sell.
The pandemic really exacerbated that.
Right. So I decided to sell off all my habitation-based real estate, and I went into self-storage because it's lien law or property law as opposed to tenant landlord law, which means if somebody puts their stuff into my unit, I get, based on state law, I get a de facto lien against their possessions. If they don't pay within the 5-day grace period, I overlock their unit. They have no access to it. And if they still don't pay off the, the late fee plus the back due rent within 30 to 45 days, I auction off their possessions, and then I have a new paying customer in that.
I mean, unit. Even if you haven't seen it, there's like the shows called Storage Wars, right? So like you're essentially a real life storage war kind of guy where you get to auction off people's stuff. Have you ever found anything exciting or interesting, antiques or anything valuable in any of these things?
Yeah, I mean, so it's not like the show. Obviously that show is very staged. Nowadays, everything's done over the internet. So, I'm not the manager at these facilities. I'm the owner. I'm the builder. And typically how these auctions are done are more eBay style now. So a manager will open the unit, they'll take a photo without breaking the barrier. They'll post it on these storage auction sites. Someone will bid online, and then they have 48 hours to 72 hours to come pick up the possessions and leave the unit broom swept. So I have no idea.
So two questions on that. Like, if you even know, what kind of price do you get for a typical unit? And how often does this happen to somebody who's investing in this type of property?
Yeah, so it depends on the size of the unit and what type of possessions are in there, right? Obviously, if in the photo you see gold bars, people are going to bid accordingly. Usually it's just a bunch of boxes of crap, So I don't really know what the average amount is. Typically, though, we're able to recover our lost rents, if you will. And then as far as how often this occurs, for us, it occurs pretty often when we buy and take over, just when we buy value add properties, right? So we're typically buying these mom and pop facilities where they just let everything kind of slip, and there's a bunch of non-paying tenants, stuff like that. So when we take over,
it's a lot of legal stuff you have to do at first, right?
Right. The very first thing we do is we send a letter to everybody saying we're the new owners. If they have a back due balance, they can pay now, or we're going to proceed with auctions on every one of their units. But then once we've stabilized that asset, it's very rare that we go to auction on any of our units.
Great.
Hmm.
It sounds like it was the right move. I mean, how do you even get started? Like,
Yeah.
I didn't even know you could do that. I thought those were corporations like Save, Storage a lot and all those store,
Yeah.
you Save Storage. I drive by the big orange buildings all the time. I thought like companies owned those. I didn't know like an individual could do that.
Yeah. So, we went from 0 to 220 million in self storage in just under 5 years. And it all started with
Jesus.
just our first facility, right? So before like any asset class, when I enter a new asset class, I want to test the waters before putting up a lot of risk. So I do what's called wholesaling, where I'll put a property under contract. I'll assign that contract to another investor that knows what they're doing. If they're willing to pay me more than what I have it under contract for, that means I must be underwriting these things correctly, right? So we did a few of those to save up some down payment money, and then we bought our first facility just outside of the Chicago suburbs. It was $970,000.
Wow.
We bought it at a 7% cap rate, and then we sold it 3 years later for $1.8 million.
So you're essentially flipping these units. You're not keeping them, or are you doing both?
I have never kept a facility more than 4.5 years.
How do you buy one for that and then double it? How's that even possible?
I mean, we've tripled them sometimes or even more. So,
But how is that possible? Like, how are you able to get it for so cheap and then be able to sell it for so much?
yeah, so commercial real estate is valued based off of the income that it produces. So I bought it based on its current income at a 7% cap rate, and then immediately came in and I raised rents, I dropped expenses, I added additional units, and then I sold it for I think we still sold it at, we did get a little bit of a reduction in the cap rate. So we sold it down, I think, at a 6% cap rate. So we had 100 basis point spread, but then we also increased the revenue by almost 35%, or the NOI by 35%. So both
Wow.
those combined allowed us to double our investment. Sometimes we triple our money depending on how defunct the facility is when we first buy them.
I mean, it
We have
sounds
a
like
perfect example.
yeah.
We have a
So,
perfect example
it
of
just
one that we
sounds so
bought in
technical.
Indiana. Yeah, it's really not that technical. So here's a for example. I bought one in Indiana, and I realized that compared to the rest of the competitor facilities, the rents were 65% below the market.
Oh
So I
wow.
came in and just in one day, I just raised all the rents 60%.
Oh my
And
God.
there's the doubling or tripling of my
That's
value
insane.
right there.
And the people that are renting the facilities, they don't care, or some of them leave. How does that work?
I mean, they can leave, but I'm still the cheapest in the market. So
Oh
what they're
right.
gonna, out of spite, they're gonna cancel their agreement and go pay more somewhere else? Usually
Right.
not.
So you're still paying. Okay. So they're still paying less, but they're paying more from what they were paying. Got it.
Yeah.
That's a really smart tactic. I mean, how did you get into this whole line of work coming from Dow Chemical as an engineer?
Yeah, when I was 16, I read Rich Dad Poor Dad, and I
Mm.
knew from that point on I wanted to be a business owner and a real estate investor. I still, wanted to make sure I had a good fallback, so I went and got my engineering degree, but I think it only lasted about 13 months in the 9 to 5 life, and then immediately started
Oh,
running my own
wow.
company. Yeah.
Getting those credit cards.
Yep. That's
which
right.
I also do not recommend to anybody.
Right.
What are some of the most common misconceptions about self storage investments? Because like for someone like me, I would have thought that was something that I wouldn't want to go into because of the pitfalls or the issues. So let's say someone's watching this or they're listening to this,
Mhm.
and they want to get involved. They want to enter this market. What is
Yeah.
some of the advice you'd give them?
Yeah, get educated. So there's a bunch of great resources all over the internet for free. You can also go to the industry trade shows. Inside Self Storage National Association, they have these really great education tracks. It's super cheap. I think for the entire weekend, it's 450 or $500, and they really catch you up to speed. And then from there, just start partnering on deals. So the first couple deals I did, I brought in someone that was a little bit more sophisticated than me, had more transactions under their belt. And I just said, hey, I'm bringing you in. I'm cutting you in on the equity because I want to make sure that you're there to make sure I'm not making any mistakes. I want to learn from what you've learned. And then from there, I just, went to the races. So we, buy and sell existing facilities. We also build brand new 3-story, 4-story Class A facilities as well. We do adaptive reuse conversions where we buy Sears buildings and Kmart's that went out of business and then turn them into self-storage.
Reusing buildings. That's a smart one right there. I mean, this is getting crazy, man. I mean, how did you do this and get up to 250 million in your portfolio in 4 years? I mean, it just doesn't seem human. Like, how did you pull that off? I mean, the stuff you're telling me is not small potatoes. These are big, big, big things you're doing. I mean, reusing Sears and Kmart's. I mean, I did a documentary about historical buildings and how we should be reusing them. I know how hard it is to do that in general and how long it takes and how much money it takes. You put a lot on the line. I mean, do you have a team? I mean, who's helping you? How did you
Yeah,
get this done,
so
man?
that was one of the biggest
Jeez.
things about this business. This is maybe my fourth business that I've started. So I love the book Traction by Gino Wickman. It teaches people how to run their business like a real business. You have an operating system for your business, and that includes putting the right people in the right seats. And then the other piece of that is making sure that you have goals that are smart, right? Specific, measurable, achievable, reasonable, and timely. Um, so we set up the business with a 10-year goal of exiting for $1 billion. That is the
Wow.
goal. Um, and how typically this works in businesses, things don't grow linearly, they grow exponentially. So the first year I only did 1 million, and then the second year it was 8 million, and then the
Right.
third year it was close to 40 million, right?
Jesus.
And it keeps kind of going up. And I
Hockey
think,
stick.
yeah, and I think one of the reasons for that is we realize that in real estate businesses, you need to use leverage and use leverage carefully, and not only leverage from a bank like getting a loan, but also equity. And that
Right.
means that we have to start a capital raising company where the whole focus is to raise capital from accredited investors that want the opportunity to double their money in 5 years or less, right? And that's how we're able to grow, is when you
Mm,
have capital at your disposal, you can execute on deals very quickly while others are still trying to figure out where they're
figure out
going to
where to
get the
get the money
money.
from.
Yeah, and I've
Right.
already closed on
Gotcha.
the property by the time they figured out where their money's
And
coming from.
and that's no small feat either. I mean, you're making it sound easy, but raising capital is a full-time job all by itself. I've
Right.
been there, done that. I mean, there's term sheets and there's legal documentation, there's legal paperwork, there's probably lawyers involved, and there's a lot of money being transacted, and they have to trust you. Who's this guy Fernando? Do I trust him?
Right.
I'm giving him $20 million or whatever it is. So, like, I mean, how did you break that kind of barrier?
So what I found is the easiest way to raise capital is to educate the people that you're raising capital from. So we went on this about 4 years ago, started this marketing campaign where we went on every podcast we knew that accredited investors were listening to. We spoke at industry conferences. We got published on, ABC and, Forbes, and writing articles for the industry trade shows. We spoke, at the front of the room at some of the biggest conferences in the world. So that brings credibility, right? But then along with that comes track record. So you start raising money from, first you use your own money until that's tapped out. Then you raise money from like your family,
Uh
and then
oh.
your friends, and
Uh
then your
oh.
friends of your friends and friends of your family. And
Oh
eventually you
man.
get enough track record of using, people that actually know you. They don't really care about the asset. They just trust you.
You.
And then
Yeah.
eventually you break into the other side of the world, which is that quasi institutional grade where they don't care who you are. All they care
Right.
about is show me the track record, show me the deal underwriting and analysis, and show me that you know what you're doing.
Right. And how am I going to get my money back?
Exactly.
With interest.
Right. Yeah.
so
Usually 100% interest.
so right. It sounds like, yeah, and there's a lot of Bernie Madoffs out there, but it sounds like, you guys are being like the shining star through the dark cloud. So that's really interesting to me because there's probably people listening to this right now saying, "Man, I really want to do what Fernando's doing. He wants to exit at $1 billion and he's already doing it, and I want to do this too." So, what are the key pieces of advice you can leave our audience to potentially do something similar?
Yeah, number one is real estate is a team sport. You can't do this alone. So I have teams for everything: legal teams for contracts, writing up my PPMs and syndication documentation, making sure our investors are protected. My construction team, they run a whole unit themselves. My value add and operations team, management company, they do everything. So, I mean, I'm
That's a
probably
lot.
touching at least 50 to 60 individuals with my organization to make this thing all run.
Wow, that's a lot. So really, it's putting together the right teams, being able to prove your traction and that what you're doing is working, and you're able to continue to grow the company. And then also you need to be able to manage all of it because it
Right.
sounds like so many moving parts. Well, where can people find out more about what you guys do and your website or your socials?
Yeah, I'll give you two ways. There's a passive way and an active way. So the passive way, you can go to our website, ssse.com. You can check us out on social media, S triple SE or Self Storage Syndicated Equities. If you want to follow me personally, I put out a bunch of free educational content on how to get started in this business. There's never any sales pitches. I'm at the Storage Stud is all my social media
Cool.
handles. And then if you want just a more active way, if you're more of an action taker, I'll just give you my cell phone number. It's area code 630-408-8090. It's my real number. Text or call me anytime.
Perfect. Thanks. SSSE.com for more information. Thanks, Fernando. Hope you guys learned something, and we'll see you guys in the next one.